how can you get people in the US excited about putting stocks on blockchains? You get these questions like, why is it better than traditional stocks that are off-chain? You know, you already have things like Robinhood, it's easy. Robinhood has close to 26 million customers. You can trade 24/5. Maybe it's not 24/7, but it's pretty close. But I think where the possibilities really start to multiply is if you can get these illiquid assets and you can kind of construct the mechanism for all of them to be put on chain, and you get that liquidity and the real-time trading that has been historically reserved only for cryptos and public stocks.
I'm thrilled to be here with Vlad Tenev, the co-founder and CEO of Robinhood on the Defiant Podcast. Vlad, welcome. It's great to have you here.
Thanks for having me. And you're probably the only person who's ever said my last name correctly.
Oh, amazing. I'm proud of that. So Robinhood obviously is a top 10 brokerage, has over 250 billion in assets under administration, and is going all in on crypto. Yesterday, you made a series of big announcements. I'll summarize the three most important to at least to me and my audience, and then we'll kind of dive deeper into them. So you announced tokenized U.S. stocks for European users. You announced tokenized private company stocks for European users, and you said you are planning to launch your own blockchain. I'll run down the other announcements: staking for Sol and ETH for U.S. users, perpetual futures for EU, 2% boost for crypto deposit, credit card rewards, smart exchange routing, tax slots, advanced charts, and an AI trading assistant named Cortex. So that was a lot, and in this beautiful backdrop. So
and USDG being approved.
There we go.
First MiCA, one of the first MiCA compliant stablecoins.
Too many announcements to keep track of.
I know Johan just threw that out there like a little sardine at the end, you know, even though I think it was quite a big announcement.
Totally. Yeah, that would have been like big on its own. But let's get into the tokenized U.S. Stocks for Europe. So currently, European investors can already get access to U.S. stocks through Revolut and other fintechs and brokers. What's so special about having stocks be tokenized?
Yeah, I mean, I think that I would think about the EU launch as serving two purposes. Number one, actually EU customers wanted exposure to stocks. We've been live in Europe with our crypto business for a little bit over a year. Mm-hmm. And while they love crypto, they want exposure to the US assets as well. And we actually sharpened our pencils because we have both of these businesses, right? And we figured out that the time to market and the speed for launching a blockchain-based offering was actually significantly faster than going the traditional route. And that got us thinking that in Europe, what we have the ability to do is actually demonstrate what Robinhood itself could look like built entirely on blockchain technology. So I think phase one, from a user standpoint, it will look very similar to traditional US stocks. The blockchain technology and the plumbing will be under the hood, with some minor differences from what typical competitors offer. In particular, it's 24/5. So, 24 hours a day, 5 days a week, which not many competitors have been able to figure out how to do. But where it starts to get really interesting is when we start plugging it into Bitstamp, which is when 24/7 trading becomes possible. And at that point, the stock tokens start to behave like other cryptos, Bitcoin and Ethereum. And then what I called phase three, which is full blockchain, non-custodial integration, is when you get all of the integrations to DeFi. So you could imagine swapping, collateralized lending and borrowing, and really self-custody, which I think would be very powerful for stocks because it would untether your stock tokens from any individual brokerage or crypto provider.
So You explained very colorfully on the chalkboard yesterday how stocks are held at 1-to-1 with the token, custodied by Robinhood. So how does that work legally? Like, who has rights to the company? Robinhood as kind of the holder of shares, or the token holder? Like, does the token actually carry rights?
Yeah, so the way it works is the token is actually a derivative, and the underlying is sort of like held by Robinhood. So what the user is getting is a derivative that's backed by the real share.
Okay. And so when that is ported to DeFi, say it's used as collateral in lending markets, what happens if that's liquidated?
So the intent would be that it would be sort of like a stable coin, right? Similar structure where the shares are held in custody, and then the only time where a share that's custodied, a traditional share, would be liquidated is if a corresponding token was actually burned.
Okay.
So yeah, I think my understanding is, and of course, these edge cases, I think, probably are a little bit more complicated. But if it was liquidated in a DeFi protocol, the token itself wouldn't actually be burned.
Oh, so okay. I guess then it would have to like Robinhood would have to burn it to also
The mechanism for minting and burning tokens would go through Robinhood, at least for the time being.
Okay. Okay, now let's get into the private tokenized shares. So this market is famously opaque and hard to get to. Can you walk me through how Robinhood can make this accessible?
Yeah, I mean, really, it's the same underlying technology that powers the public shares. Now, I wrote an op-ed in the Washington Post in the U.S. in January of this year, and the lead was really that you have these companies that aren't going public. Some of them have essentially made the decision that they would never go public unless they were forced, and they're basically able to raise tens of billions, maybe hundreds of billions of dollars from the private markets. And that wasn't possible before. So they have no corporate need to go public, but what happens is retail investors are left out of those gains, which keep accruing to a smaller and smaller selection of wealthy insiders. The days of being able to invest in an IPO like Microsoft and Apple and get a huge appreciation in the public markets seem more difficult to come by. I mean, it happens from time to time, but if you want to invest in the AI economy as a retail investor, your options are quite limited. And you see gigantic companies that are already quite big, Tesla, for example, NVIDIA, and that's kind of the exposure to the AI industry. So using the same technology that powers tokenized public stocks, we're able to tokenize pretty much anything as long as we can acquire the traditional shares. And I think this is going to be particularly interesting for the U.S. So the question we had is, okay, how can you get people in the U.S. excited about putting stocks on blockchains? You get these questions like, why is it better than traditional stocks that are off-chain? You already have things like Robinhood. It's easy. Robinhood has close to 26 million customers. You can trade 24/5. Maybe it's not 24/7, but it's pretty close. But I think where the possibilities really start to multiply is if you can get these illiquid assets and you can kind of construct a mechanism for all of them to be put on chain, and you get that liquidity and the real-time trading that has been historically reserved only for cryptos and public stocks.
So you would have to, Robinhood has access to these OTC markets for private companies, and kind of that's what you're unlocking for anyone, really.
Yeah, that's basically it. And I should clarify that the private shares we gave out were essentially a gift. So this is a way to demonstrate the technology. They're not yet able to be traded. So customers will have to hold on to them. But actually, since we've announced last night, lots of private companies have been reaching out to me and asking, you would think not a lot of private companies would actually be interested in this, but
why not?
I've had reach outs, and I've had people asking me, when can we get our own private stock tokenized? So I think we'd like to open this up much wider, figure out how to allow trading in the near future, and also make it available to lots and lots of private companies so that people can invest in the most innovative and valuable private companies. And I think over time, what I get really excited about, since the initial private stocks will be, the transactions will be on a secondary basis. So this is buying stock from existing shareholders of a company. But I think over time, this can migrate to being a tool for companies to raise primary capital. So you imagine an entrepreneur who's starting a business, and this becomes a mechanism for them to get quick and easy capital. So they wouldn't need to go and do the dog and pony show where they pitch venture capitalists and go around Sand Hill Road. If they could just go on Robinhood or any other platform, really, push a button and maybe submit some information about what their business is and what their venture is, and they get immediate access to, a global pool of investors that want to back and get the exposure to that new startup technology. I think if we can deliver that, we'll just have more startups. The costs and the friction to creating startups will dramatically decrease. Because, I was an entrepreneur early stage, and you have to do two very difficult things simultaneously. One is build a product that people want, take it to market. You also have to fund the business. And early stage funding the business takes a lot of time. So you almost have these two full-time jobs that you have to simultaneously do. So I think if we make that easier, we'll have more startups.
That'd be really interesting to have a primary market on Robinhood. And do you envision this as startups raising via both equity and tokens?
Yeah, I mean, I think that it's a good question. There are existing mechanisms where startups can issue tokens, right? They can have ICOs. Historically, that has been a completely separate process from actually raising a normal fundraising round. And you've had to make sure, in the US at least, that US persons don't participate in those. It's typically been used only for largely
investors.
It's accredited. It's crypto companies have been doing this for token launches. But what I'm envisioning is these processes merge somewhat. So if you want to go the crypto native token route, you could, but also you could just have something like a traditional financing and traditional shares, traditional documentation. You're dealing with the same lawyers, and we can just be a utility that helps tokenize those shares.
Super interesting. Okay, before going too deep there, let's switch to the other big announcement I want to cover, your own chain.
Yes.
So this will be, as I understand, Ethereum Layer 2 on Arbitrum, right? Is this on Arbitrum's
It's gonna be similar to the Arbitrum chain, but it's not going to be a roll up on Arbitrum. So it's a Layer 2.
So it's its own separate Layer 2 using Arbitrum's
technology, exactly.
And it'll launch directly like that, or will you start as a roll-up in Arbitrum?
Well, at first, the stock tokens are on Arbitrum, but yeah, it'll begin as, the intent is for it to begin as Layer 2, immediately upon launch.
Wow, that's huge.
What if sending crypto felt more human? Pulse just launched Red Packets, a new way to gift tokens with meaning. It's gasless, gamified, and claimable inside group chats only. Think airdrops meet social cues on-chain. Backed by smart wallet tech and live across major L2s, Red Packets turned communities into microeconomies of gratitude and growth. No seed phrases, no friction, just connection with value. Check it out at pulse.social.
Can you go through why you went with both Arbitrum instead of other Ethereum layer 2s, and why you went with Ethereum instead of other layer 1s?
Yeah, I think that at the end of the day, what it came down to was I don't think there was a layer 2 out there that had the same specific goals as ours. So what we want to do is build the first chain that's optimized for real world assets. So we have stocks. Eventually you can imagine all things that you can find on Robinhood in the U.S. Perhaps we find a way to get options there, futures. It's funny, tokenized futures when you have perpetual futures. So it's going to go both ways. Tokenized traditional instruments and then traditional versions of the native crypto assets as well. So I think there will be a lot of convergence. But yeah, we would like to tokenize a wide range of real world assets. I think that's how we can distinguish ourselves. You know, I talked to a lot of these chain developers, and they all have some variant of our chain is the best chain for degens. And I think there's enough chains for degens out there. I think that market is fully served. But I don't think there's anyone building chains that are optimized for real world assets.
And you thought that Arbitrum was the best place, or like that technology was the best to do that?
Well, the great thing about it is we have control over the chain. We can develop it and make customizations as necessary. And so we thought that was a nice benefit because we don't want to be dependent on any third party for when we need something. So if we have the ability to have control over the development of the chain, of course, while maintaining decentralization, that was very attractive for us. Yeah, and a lot of the other layer 1s don't have as robust of an ecosystem for having your own chain, having your own layer 2 on top.
Okay, so on the Ethereum side, it was the ecosystem that really...
The ecosystem, the ability to create a layer 2 and have control over how everything works. And also the fact that interoperability is important to us, and there's a lot of assets already on the Ethereum chain, and there's a significant network effect. And you know, I think over time we'd like these tokens to be on all chains. So it's really, where is there going to be a first-class experience where perhaps you'll get the early features first, and you'll get great support. So we'll have the chain, we have the wallet as well. Robinhood wallet, which we're going to build a really, really nice experience for the tokens. And since it's crypto, customers will be able to switch to another wallet. And over time, I'm sure there will be robust bridges and interoperability, and people will be able to move their tokens to all sorts of chains. But at least the parts that we have control over, we can ensure that there's a first-class experience.
Perfect. Are you planning on having your own token on the chain?
No plans at this point. I mean, we haven't thought much about it. The focus has really been on how to make sure stock tokens work really, really nicely. I wouldn't be opposed to it. I mean, if there's some specific problem that would help us solve, I think we would look at it. But we're no imminent plans, I should say.
What about like having your own chain improves, you think, just like overall experience for your users?
Yeah, that's a good question. I think right now, for what we've offered, I mean, the stock tokens are available on Arbitrum. You saw the transactions are quite fast. But I think there's going to be a lot of new things that we'll have to unlock, in particular DeFi swapping. If we get into the DeFi stuff, if we want to offer some products that we also have to enable, KYC or some of these more unique features than having having our own chain, I think, would be important.
And so for the going back to the U.S. U.S. tokenized stocks in Europe and perpetuals, the tokenized private market, those are all available in Europe. But what, from the regulatory side in the U.S., are you expecting before you can roll those out in the U.S.?
Yeah, actually, since we've rolled this out, I think there has been some excitement from policymakers in the U.S. They saw the launch over here. And I think one of the goals was also to show what's possible if, we unleash crypto technology and let it fully merge with traditional financial services. I think we've been talking about this in crypto for quite a while, but there hasn't been too much in the way of actual product that people can use in a nice form. So I think that's compelling if you can actually see real product, Europeans enjoying access to U.S. stocks, us making it very easy to use, and really with an experience that has no compromises. Then I think, the U.S. will follow along quite quickly. We've already been having a lot of conversations on tokenization, and it's something that we believe the SEC has the mandate and the power to do without additional legislation by Congress. And there is a crypto task force at the SEC. They had a tokenization roundtable. Johan, our crypto GM, was actually a participant in that. So I think they're excited about tokenization. They'd like to make it happen. The problem, of course, is, U.S. is a mature market, and we have infrastructure that's already there. So you have two problems with that. One is, the incentive to upgrade is perhaps less big than in a market that has nothing.
Right.
It's sort of like how China went from no trains to high-speed rail. They sort of went to the technology frontier. Or how, in the US, we went gradually to mobile and broadband, but in some of these developing countries, they're just putting up the fastest, most capable broadband and mobile towers possible because they can just get the new thing. And in the US, we've got medium speed rail. And maybe it's not as good as high speed rail, but the delta in cost to upgrade it is probably not worth the incremental benefit. So I think you have that to some degree with the traditional financial system. You also have a lot of stakeholders that have to be satisfied. And these stakeholders are worried. If stocks go on blockchains, what's going to happen to my business? I have a pretty big business here. I employ thousands of people that rely on it being done this other way. So I think you're seeing some of that with stablecoin as well. There's the banks are a little bit nervous about it, as you can imagine. And I think that's the trap of being at the frontier for some period of time. There's entrenched interests. It's difficult to navigate, and that keeps you from, if you're not careful, that can keep you from innovating.
But you're not worried about those same issues because you also have, all your infrastructure in the U.S. is geared for traditional stocks, but you're okay with making that move.
Yeah, we're okay with that because I think that if there's better infrastructure, then I think people will have to embrace it. I'm very interested in being at the frontier technologically. I mean, we were the first that really popularized investing on a mobile device. And that, to some degree, was another example of this, right? There were entrenched companies that had built out web interfaces, so you can trade tethered to your desk. And they didn't really want a world where people were trading on their phones to exist, threatened the status quo. And that was an opportunity for us to come in. So besides just building an exciting future, I think there's a real risk to getting stuck with what's working now, because if we don't embrace it, someone else is going to figure it out, right? And we don't want them to eat our lunch. We'd like to eat our own lunch.
Totally. Okay, so that's a good segue to what I wanted to ask next, which is you're speaking of like being first to these innovations, you are the first major fintech to announce that you're building your own public blockchain. I'd like to understand how this kind of all these crypto announcements fit into the longer term, bigger vision for Robinhood.
Yeah, that's a great question. So we had an investor day in New York actually last December where I talked through the 3 arcs behind Robinhood. And you can imagine these arcs as being active for a period of time and kind of building up off of each other. So we have our 1-year arc, which is being number 1 in the active trader market. You know, active trading is our bread and butter. We innovated a lot there. We have some of the lowest pricing in the industry across all traded assets. So we should be number 1 in market share across all assets that we trade, including crypto, equities and options in the U.S., futures as well. And I think we're doing very well there. But not everyone actively trades. And so the ultimate size of that market is relatively small. You know, it's probably tens of billions in annual revenue, maybe hundreds of billions, but still much smaller than the other longer term arcs. Then we have our sort of medium term arc. I call it our 5-year arc, although these numbers are approximate. And that is being number 1 in wallet share for the next generation. So we want to go beyond trading to being the place where you keep all of your money, your assets, and the platform that you process all of your financial transactions through. That's where our credit card business comes in, retirement, advisory in the US, our recent acquisition of Trade PMR, which is a human advisor platform. So it's really, how can I put my paycheck into Robinhood? How can I have my savings there, my banking, do all my spending, and then have all of my investing ranging from, you know, buying some stock all the way through to family office style private wealth management. That's the goal. And so you should never actually have to take money out of Robinhood. It should just be a place where you custody your assets, you put money in, and we help you with everything else. And now building off these first 2 arcs, we have our long-term arc, which I call number 1 global financial ecosystem. And that's taking what we're doing for the US and for retail and expanding it across 2 linearly independent vectors. Okay. It's a math term. One is from US only to fully global, and the other is from retail only to business and institutional. And so to answer your question, that third arc, that long-term arc, we actually expect that to be the majority of the business in a period of roughly 10 years. We think that's how long it's going to take for international, or at least ex-US, to comprise half of our revenue, and also how long it'll take for business and institutional to surpass retail consumer. And I think the chain plays into both of those. You know, blockchain technology is global by default, so that's a path to expanding internationally. It's also a path to onboarding developers, you know, many of whom were in the audience there, and institutions. And I think that as the institutions see the power of this technology, they're already very interested. We'll make it easy to integrate, and we can get all of them to be using these real world assets on chain.
Okay, so you're thinking of the Robinhood chain as an enabler for kind of your 3-arch vision.
Yeah, I think that it could be an accelerant to both global expansion and also institutional and developer adoption.
Over time, how much of like Robinhood volume, or you know, whatever kind of metric is most relevant, do you think will happen on your chain?
I think over time, traditional financial services and crypto will fully merge. So I think there won't be a distinction. Now, this may take a little bit of time, but I don't think there will be a distinction between traditional volume and our crypto volume. I think more and more will be on-chain. And, you know, maybe at some point, the entire US equities system will go on-chain. It will be powered by technology. I don't know if it'll all necessarily be on our chain or if it'll be some consortium, or maybe it will be onchain, but it gets decentralized to a degree where everyone runs their own sequencers. But I think the end state of this is that public blockchain technology powers a significant portion of the critical financial infrastructure in the U.S. In the same way that it used to all run on mainframe, right? And mainframe then got replaced by on-premise data centers. And now they're trying to figure out how to go on cloud. The cloud transition hasn't fully finished yet. But blockchain's sort of the next in line after that. It's more and more of the business logic now is being handled by public infrastructure.
So you kind of answered another question I had for you that, I think there's a question among traditional finance and even people in fintech about whether crypto will, on like how big crypto will actually be. Like, will it remain a niche asset class within finance, or will it actually become the backbone for financial activity and like the settlement layer for all assets in the future? Because you like, as you mentioned, you already have trillions of dollars in this old system that would have to like migrate onto this new system. So it's like a huge undertaking. How do you see that transition happening? Like, do you think eventually like all new assets will be issued on chain, but we'll still have this kind of old financial system running? Or do you see like actually migrating to blockchain?
Yeah, I mean, if you think about what happens right now with a company being formed in the US, for instance, company has a seed stage financing, and there's formation documents and financing documents which are being passed back and forth by lawyers, essentially. And then you have your cap table, which is usually managed by some software. Carta, I think, is the dominant player there. And then when you go public, there's a migration process, right? It goes from Carta to whoever custodies your stock and manages the employee stock purchase plans and the stock rewards for public companies. So it's already a little bit of a mess, and there's migrations involved throughout. I think the first instance of this will be blockchain coming in there as sort of an adjunct, and much of these pieces being the same. Although you see them kind of being optimized independently by different forces. You've got AI in there, you've got standardized documents and legal processes. There's a lot of folks, and Carta themselves as well, innovating on the cap table side. So I think there will be reconfigurations and transitions across the board. Issuing natively on the blockchain, I think, is just another form of this process. Like, you're still dealing with lawyers, there's still paper documents. I don't know if anyone is actually just writing code and distributing tokens at any significant scale without some of these other components. So I don't actually anticipate that will change unless other forces sort of streamline that over time.
So yeah, gradually it should just be an organic kind of natural process for blockchain to just be a part of the progression of being in capital markets.
Yeah, I mean, if you think about what a physical traditional share is, there's not like a thing that you can hold. We're kind of past the days where there's stock certificates and that was a share. Even that was representation of a legal contract that is somewhere in the ether, right? So the token's just the evolution of that.
The PR Genius is a top crypto PR and growth marketing agency, helping brands globally with expert PR and strategic growth marketing. They've worked with 300 plus projects like Movement Labs and IO.net. Unlike traditional agencies, they charge only on performance. Their services include earned PR opportunities and marketing services to help boost wallet holders and organic X followers. Learn more at www.theprgenius.com.
So I think among kind of the like fintech ecosystem, probably the only company that is similar to your vision is Coinbase. Do you view them as a competitor, and how do you think both company visions differ?
Yeah, I mean, I think in some sense, all companies in our space collaborate in some ways and compete in others. I mean, you look at the big banks, for example, all the big banks are trying to serve all of their customers' financial needs, not just checking and savings accounts, but also credit cards, investing products. But, you know, Robinhood has bank accounts. We're partnering with many of them. So I think the actual answer is somewhat complicated. Like, we compete for market share in some ways, but we also have opportunities to partner. And at this point, we're both still a fraction of the total assets that are out there. You know, we've got hundreds of billions of assets. I think they have a similar scale. But you look at how many assets are just going to be transferred from baby boomers and silent generation down to Gen X and millennials over the next few decades, the number is something like 124 trillion. So yeah, I think the real opportunity is making sure that Robinhood has a good chunk of those, so we're capable of serving that. And we continue to build great products and roll them out to customers, deliver them over time. I really try not to spend too much time thinking about what competitors are doing. I think it tends to take you away from the customer and get you into this like competitive benchmarking mode of running your business, where you're just kind of looking at what everyone else is doing, trying to see what to copy, and you're not really thinking critically from first principles.
In DeFi, we love to talk about the DeFi mullet. Have you heard of that term?
You mean like this one I've
Yes.
got here? Yeah, gentleman's mullet. Yeah.
So I think Robinhood can be kind of the perfect embodiment of that. It's like the idea that DeFi is consumed with kind of a slick, familiar front end with like a mainstream app like Robinhood, but on the back end, it's all DeFi, and you're able to offer not just token swaps and trading, but more sophisticated DeFi operations like lending and borrowing. Is that something that you envision?
That's appealing to me. So I particularly am a fan of mullets, as you can imagine. The problem is most people are not. I think if you went to a person on the street and you're like, what do you think of your financial app being in the form of a mullet? I don't think they'd be very, very happy.
Maybe you'll need a different marketing term.
Yeah, I think we have to move away from this whole mullet thing. So it might be hindering mass adoption.
Okay, but about the actual beyond the hairstyle, what do you think about offering DeFi products?
I'm pro. Yeah, I'm happy to offer DeFi products. I mean, we have our wallet. I think the real question is, can you make it easy to use and lower friction than the alternatives? And I think we're about to find out that it is possible to do so. The friction for traditional financial services is actually quite high in a lot of cases. And DeFi streamlines that. It introduces a new layer of friction that is not there in traditional finance, which is sort of like key management and cross-asset bridging and sort of like the whole gas token thing, which I think there's good solutions to remove. So I view it as it's just that the technology and the user experience has not been figured out yet. But that's one thing we really care about. Actually, can we streamline it? Can we do a lot of work on the user experience to make it understandable? And sometimes that's sort of like dismissed as front end innovation, like, oh, that's very easy. It's not real technology, but yeah, it can be quite complex, and we spend a lot of time working on these things and trying to improve them.
No, definitely key. I mean, from using DeFi, I can definitely tell you front-end innovation is where it's at.
Yeah. I mean, when we introduced our wallet, a Robinhood wallet, one of the big things was gasless swapping. So I think the problem was the gasless swapping was on Polygon, and people wanted to see it across everywhere. So we've expanded it over time, but yeah, that was at the time the very bleeding edge. Nobody had spent much time trying to figure out how to get gasless swapping to work, and we were able to work with some of our counterparties to make that happen. So it'll be things like that, and you'd be surprised. A lot of folks in crypto don't really talk to customers that much. They're just talking. They're going to conferences and speaking to other developers.
Yeah, no, I'm not surprised.
And so they hadn't really heard that this was a problem. They're just like, why does my protocol stop growing when I stop giving rewards? Well, if you stop giving rewards, you get the people that are really, really motivated maybe are a little bit less motivated. So you actually have to make the thing work pretty well.
Exactly. Yeah, so I mean, if people are already going to be using your tokenized stocks as collateral in Aave, for example, maybe it'll just, at some point, it'll make sense for you to just offer people to do that through Robinhood directly. And yeah.
Absolutely. Yeah, and I think also there's benefits to, some things that are very easy with DeFi, swapping between different assets. You could go from, wrapped Bitcoin to a stock token. And I think particularly in the EU, I know there's tax benefits to doing those things. So those are things that might be very difficult for us to do in the traditional sense, but become easier with DeFi.
To start wrapping up, I would love to just understand your motivation behind all these changes. What do you think? Was there something about your upbringing or your career, or what do you think is it that has made you such a strong believer in crypto?
I think that it's just there's two technological shifts that affect our industry. And we're in the center of both of them, crypto and AI. And I grew up as I wanted to be a scientist. I became interested in theoretical physics and mathematics. And really what motivated me is creating new things, new theories. I'm not as motivated by improving upon things incrementally, even though that's very, very valuable. So for me personally, I like new things and just like figuring things out. And I think in the realm of business, that's just working on the frontier technologies, crypto and AI.
So just your drive to innovate is what's behind all of this move to crypto.
I think so. Yeah. I think the drive to innovate and to work on new things that challenge the status quo and unlock possibilities that just didn't exist before. I think that's ultimately what drives progress. So if we can be a part of that, I think that not only helps us stay relevant as a company, but also just pushes the entire frontier forward.
I think it's important to understand because, like right now, crypto is starting to be trendy again. Yeah. And I think we'll get into a phase where we'll see lots of announcements from many different big companies who are, like launching crypto experiments and products. But I think it's those products that come from companies where like leadership is actually emotionally kind of invested, who actually believes in the technology, are the ones that are gonna succeed. So I think it's key that you actually believe in this technology, and I think that's a huge step to see Robinhood's kind of crypto initiatives actually take off and not remain kind of like science experiments within the company.
Yeah, I think believing in the technology is an interesting question because it has with it almost a religious element.
Yeah, there's yes.
Right. But yeah, I think my my belief in it is more on a practical level. Like if it can solve real customer problems and it can do it at a lower cost and with a nicer experience than the alternative, then I believe in the technology. But if something else comes along that solves it 100 times better and with 100 times better user experience, and everyone coalesces on calling it something other than crypto, then I would believe in that as well. Because at the end of the day, the difference between things that don't work and things that work very, very well is not so much the belief in the technology. It's maybe a belief in yourself that you can iterate your way to something that works, but it's just the understanding that you have to have real customers paying real money in a way that sustains the future development of the product. That's what it comes down to. So I think there's a lot of people that believe that haven't been able to figure that out. And also a lot of people that maybe just like have built great businesses that perhaps say they believe, but and maybe over time they believe, but at the first they saw an amazing business opportunity.
I think that's a great place to wrap up. It's not just about believing religiously, but also just seeing obviously how practically this technology can help your users. And so we'll see how all these crypto initiatives will start helping Robinhood users. So thank you so much for joining me.
Thanks for
this
your
was
time.
amazing.
Yeah, thank you for joining us here in the French Riviera.
Oh, my absolute pleasure.